Welcome to Bears in Exile. Today is Wednesday, July 4th, and it's Independence Day. So I hope everyone is having a good time. This is the market overview for going into tomorrow, and the one to square with the one that normally would have come out last night. But it was a half day in the market, so not too much to go over. But there's plenty to go on looking forward. So, anyways, that didn't make too much sense, but it will in a moment. Alright, starting off with the Dow, had a very nice melt-up day on Tuesday. Dow up almost 72.5 points. And very bullish. Yeah, light volume, holiday, blah, 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 doesn't really count. But we made a new recent high on Tuesday. Very important, very bullish. Do have a little bit of a warning sign in the heat map area, but we have everything moving up. The MACD histogram, RSI, CCI, stochastics, 14-day RSI moving average, and they have a few of them are getting high, but yeah, they have room to move. So definitely bullish. And I'm going to do a few different things today, since so much can be tossed out on its head simply because it was a holiday week. And let's see here. I'm just going to take a quick gander at the pivots because I think it's really important. You can see we now are definitely going to have a higher pivot since we have a new high. So even if we were to pull back here, we're in a bullish arrangement, since we can presume that we'll have a higher low at this point, which is very cool. Definitely have a higher high as long as the zigzag maintains itself of higher highs, higher lows. The bulls have nothing to fear. So that's something in their cap. Beyond that, we have a potential inverse head and shoulders, which is a little bit of a stretch, but nonetheless, something that a lot of people are probably going to see and say, oh, we're going to zoom to the moon. Certainly would crush a lot of bears, but we have this low over here. I don't consider that a shoulder at all. We definitely have a head, and back here a potential shoulder, and right here a potential shoulder, with this one being lower than the one on the left, which is proper. We have more volume on the one on the left than we do on the right, which is also proper. So the question becomes, can it get back to the neckline now? So I like the neckline because it's pretty clean. You have a whole arrangement of highs in the same general area, but I would consider it this one, which is 13,338. 400 points from where it is now. Seems like it would be a great place for the market either to run out of steam or just shock everyone. It's enough time that you could have some news, QE3, whatever, just something to be on the lookout for. It's very, very early, but like I was saying, the indicators all do have room to move, and barring a problem in Euroland, could it actually get here, defy all odds, and then do a massive swerve or just a huge burn by actually taking it out. Now there's another reason why I think that is something to watch, and that is all the volume. We have positive volume on everything. Dual volume flow, on balance volume, volume weighted MACD, accumulation distribution, volume price trend, all greens. And this was a system that I've been using here and there that seems to work pretty darn good. At the very least, it gives really good problem signals, and we don't have any problem signals at the moment. So can this go higher from where it is? Yeah, absolutely it can. We do have this level of support that's ascending. So, can this go back down and hit that and then bounce away? Yeah, and that would be fine. Since it's ascending, we'd still have a higher low pivot. So, anyways, something to think about. And actually, if we look at volume at price, we can see that we are clearing all of the resistance levels that existed in June, and they are functioning as support at this time. We are coming in to a major level from May, just above 1300, and you would think, yeah, at 1300 there should be something, because it's a a perfectly round number. So it should get to the 1300 area, maybe have a little pause, maybe have a little bit of a fight, and then beyond that, not too much until the 13200 level, which is not far away at all from a potential neckline. Very, very interesting. So, of course, nothing is absolutely perfect or infallible, but it sure seems like there's plenty of reasons why it can get back to this point. Moving on, SPX also making a new recent high on Tuesday. Not that it can totally be trusted since it's low volume, but once again, we have the exact same thing in that we do with the Dow. This one is a little more tricky because you have all of these squiggles which are better defined than the Dow, but I still think it's this is just noise here, and what matters is right here and right here, and this over here does have higher volume than this over here, but it is a little more convoluted. The most important thing, ascending highs and presumably ascending lows, and we'll know pretty quick if that's going to break, if that's going to change. But indicator wise, looks decent, and yeah, you could look at this on the MACD histogram, say, oh, we're setting up a daily negative divergence, but the MACD is still rising, so there's a possibility that this is going to be broken. So I'm not going to really get too hot for that at the moment. 14-day RSI moving average still climbing, lots of room to move. So yeah, there's time for this to break. And on SPX, we have this descending trend line connecting two of the previous highs, and it takes us in right about to the 1400 area, only about 25 points from where we are now. That will be a important, very important level that if it breaks, it should tell us a lot, and if it doesn't, we'll know pretty darn quick. So yeah, there it is. Going on to the VIX. Yeah, this one actually does tell us quite a bit on Tuesday. We do have a possible bottoming area in the heat map. Maybe it needs a little bit of a bounce, but we did make a new recent low, coming very close to the current floor. And we have a doji star. Short-term moving averages all pointing down. Indicators all pointing down. We do have possible positive divergence in the MACD histogram, but there is time for that to get broken out. So we need to turn around before it really means something. And that's that's pretty much all there is to that. TNA. Yeah, this one should lead, and it is leading. Woo, it's leading good. Outside the upper Bollinger Band Third day in a row, just pushing that sucker on up. All of the secondaries all pointing up, possible topping area at least for needing to work itself off, but very, very bullish. And yeah, we have this previous high over here at 61.92, and then we have the ceiling up here at 66.68, and we can see that there's a few different kinds of trend lines which could connect the two. Those have all been broken. It is bullish. Oh, actually, I guess we have a little bit of a tick down on the CCI at the end of the day, last couple of days, but nonetheless, not bad. Not bad at all. If we look at volume at price, we can see that we've ran away from all of these resistance levels, broken them all. Coming up on another one just shy of 60, another one major level up here at 62. But beyond that, it's not very bad, not bad at all. So just shy of 60, 62, breaks both of those, and wow. And obviously, with you can see this better defined as well. If we look at the pivot points, we definitely have a higher pivot high, assuming that we'll get a higher low as well to follow. I mean, that could happen anytime. That could happen on Thursday. But we can also see we have this whole little shouldering area, head, shoulder, higher volume, lower volume, and then we have this but be a pretty good little neckline somewhere in between 65, 66 area, maybe all the way down to 63 if it's sloping. But all we need is a defined the defined neck area for the right, because this has to finish out. I just find it interesting. And if we look at the volume on TNA, we have no warning signs. We have all greens on volume and plenty of room to move as well. On balance volume just getting underway to the positive side. Volume weighted MACD, plenty of room. Accumulation distribution, not as much room. Yeah, not as much room. But still, no real warning signs at the moment. People trying to jump on before it runs away. And if it runs out of juice right at the neckline, that would be spectacular. If it is an inverse head and shoulders, you know, it's just a possibility. And UUP, bearish engulfing on Tuesday. Bullish for the overall market. A little bit of a warning area in the heat map, but it is diminishing. Down on the stochastics, 14-day RSI moving average, histogram, and MACD, sideways on the CCI and the RSI, and we've got this this little bottoming area, which is really interesting because it came down, hit it, bounced off, came down, tried to hit it again, bounced a little bit, goes in for another hit, it can break, and if it breaks, that's going to be really good for the market. I'm going to show you why. Here we have a possible head and shoulders on the dollar. Right shoulder larger than the left, just like it's supposed to be. And higher volume on the left shoulder than the right, which is how it's supposed to be. And we have a very clear, very clean defined neckline here. Our two previous lows, 22.4 roundabout, breaks that sucker out. We have a very clear 60 cents from the bottom to the top, which would give us a target of 21.8, which almost lines up perfect with this previous low. Makes a lot of sense. if that were to play out. Can we get to the neckline in the Dow and SPX? Absolutely. So just some secondary information that could be very, very useful. If we look at the volume, look at the interior of the dollar, we can see that we have lots of problems. We have 3 reds, and the very important unbalanced volume is in a danger area of also going red. It's just fighting and fighting and fighting, and this one goes definitively red, bad. And volume price trend also in danger of going red. Could have 5 reds very shortly, which will of course be completely news dependent, but those Euro people are hot to try and fix or pump their market. ECB expected to cut rates, the UK expected to cut rates, and of course they keep increasing the financial firewalls, blah blah blah. Not that you can trust the Euro people since they like to get into fights a lot. So, but looking at the internals, possible problem. Well, for the dollar, it'd be good for the euro. And beyond that, volume at price. What do we have here? Well, this is not as well defined as I would like. We can see that the major level that should be support at this point, we closed right at it on Tuesday. Beyond that, it falls off rapidly, and there isn't too much of anything to catch it until about 22.15. And we have a possible ascending trend line here. It does cut through this area, which is not good, but we do have 2 touches, and which lines up also with round about 22.15. That will be higher by the time this comes down to hit it, if indeed it wants to do that. But last month's major price consensus level, sitting right at it, breaks that out. It's already below the major price consensus for the new month, and below the lower price consensus for the new month. This does not look good, and that's about all there is to that. And secondary is very friendly towards further down movement. Third hit might break that sucker. Proper third hit, that is. And XOI, oil. Oil is bullish, the market is bullish, and we have everything ticking up at the moment. Very nice. New recent high, be a higher pivot high, higher low pivot assuming. Coming in on the 200-day moving average, breaks that sucker out. Could even go up for a test of the recent ceiling. That move by itself will be very large for the market. Now we have the uncertainty in the Middle East with Iran, blah, blah, blah. Can oil go higher? Yes. Is it behind schedule? Yes. We had the OPEC nothingness a few weeks back. We were expecting it to go higher at that time. They messed that up, and it's just taking its time catching up with the Iranians. So, interesting. Oh, I don't have proper volume data on this one. Can't do anything with that. Sorry. Alright, moving on. CompQ. The NASDAQ. This one should be leading just like TNA, and just like TNA, it's doing pretty darn good, unlike last time when we were going up. New recent high, higher low, pivots are in agreement. We do have a descending trend line coming right into it. We should know really fast if this is going to matter, if we're going to be turned away. Even if we are, as long as we have a higher low when it's done, the bulls have nothing to worry about. Do have a little bit of area in the heat map suggesting a topping area, and that's fine if it wants to pull back a little bit. So long as the pivot low is not taken out, bulls have nothing to worry about, not in the short term. Maybe I should say in the intermediate term. Beyond that, everything moving up. MACD, histogram, MACD, RSI, 14-day RSI moving average, stochastics, CCI, all moving up. Going on to Apple. Strong Apple, strong for the market overall. Making a new recent high on Tuesday, hitting the upper Bollinger Band. A little bit of a topping area potentially in the heat map. This can go for an extended period of time, as you can see here. Everything moving up. MACD, bullish cross, MACD histogram, RSI, 14-day RSI moving average, stochastics, and CCI. Very, very nice. Excuse me. And this sucker, since it's so important, how about its volume? Well, not as clean as we would like. But by the same token, because we do have 2 reds currently, we can see that they're also in the process of turning and going green, in which case we'll have actually we have 3 reds. All 3 of them are lined up for a green cross, in which case the internals of volume for Apple will be 5 greens and fresh turns, which is normally where the good moves happen. This is pretty darn positive. So long as we can get a little bit higher, it looks pretty good to me. And if we look at the volume, where Apple should run into some problems, we're pretty close to this level. It's right at, where is that? Yeah, 604. Another one up here at 625. Has plenty of room just in the short term for, a little bit higher. Doesn't look bad to me. And of course, we'll need more data as we hit those levels, approach those levels. But not a bad looking chart. And GE, oh yeah, look at this sucker. Amazing, amazing. This one had led the Dow over the last few days, which it's supposed to do. Do have a few problems in the daily chart that are not as nice as everything else. Could potentially be leading that as well. Down on the CCI, down on the stochastics, up on the 14-day RSI moving average, sideways on the RSI, down on the histogram, and up on the MACD. Very mixed chart. Nothing like the Dow and SPX. Can this turn around? Yes. We do have a downtick, however, in the daily time frame. Gives us a target of about 20.05 roundabout. Having this back off a little bit would be more than fine at this point. It's so far away from the long-term moving average bar. And beyond that, which actually does jive with the heat map being green on many things, maybe need to be worked off just a little bit. Yeah, look at that. That lines up perfect. Bubble corrected target lines up perfect with the major price consensus level from April. So, yeah, that would be natural. Get down to that, bounce off of it, be a very bullish signal. And if we look at the internals of GE, we have 5 greens. And with the exception of the volume-weighted MACD, no really obvious problems of getting a red cross in the near future. At least not at this time. So, yeah, a little bit of a pullback, no problem. And this is not a bad looking chart after it does a little bit of a corrective move. GLD, very nice. Gapped above the long-term moving average bar, closed above the major price consensus level. 14-day RSI moving average is curling over. Everything else is still pointing up. No real area in the heat map suggesting a problem. And just out of curiosity, because I don't like the 14-day RSI moving average pointing down. Oh, this one does have some internal issues. We have the volume weighted MACD pointing down. Volume wise, we have the dual volume flow going down. But we're still good on the unbalanced volume, accumulation distribution, and we are in trouble potentially in the volume price trend. So, actually, this one is not as nice as it would appear at first glance. And, matter of fact, see, this is one of the reasons why pivots are so darn important. We have potentially lower highs, lower pivot highs setting up here, and lower pivot lows also setting up. This one could have a nasty little drop. Question will be, can it take out this pivot low? Ooh, yeah, that's not as nice. I don't care for that at all. And SLV, same as gold, 14-day RSI moving average rolling over, everything else still ticking up. These could finish out their moves to the upside, turn around, join the 14-day RSI moving average on the way down, and that will be a ugly little move. Yeah, we talked about the fresh low from a few days ago, last week, and yeah, that holds up as a really bad sign. We could have a lower high pivot here, and then presumably at least go in for a test of the pivot low. I don't like that. Nope, nope, nope. And moving right along. Oh, VXX. Oh boy. New fresh low. All the secondaries pointing down. Possible positive divergence, but there's still plenty of room for this to move to the downside on the indicator, so that can be busted, can't be trusted at the moment. And if we look at the internal volume structure, we have all reds, all 5, all red, and without any appearance of a new cross to green at this moment. New low, really bad looking. So good for bulls. Oh, pivots are not well defined at the moment. Certainly, no matter what, we definitely will have lower highs and lower lows descending. No obvious change in that structure. And volume at price, it's below everything. Complete breakdown. Terrible. Good for the bulls. Good for the bulls. That's why I'm showing it. Well, I'm showing it because I should show it, and then you make your own decision. FXE, the euro. I should have looked at this one earlier. Getting back to the long-term moving average bar, running into some problems. We do have higher pivot lows. We do not have higher pivot highs, however. So this is in contrast to the dollar. It is not a perfect inverse. RSI ticking down, everything else ticking up. It is not as strong as the dollar, inverse speaking. So also something to be aware of. What else is there? Oh, JP Morgan. Fighting with the 200-day moving average still. Stochastics rolling over, CCI rolling over, RSI rolling over, histogram slanting down, MACD going sideways, 14-day RSI moving average still holding up. Very interesting. This is not representative of the market, but it should not be discounted either because it is so darn important. Ending with a hammer, holding inside the long-term moving average bar, still above the major price consensus level for the new month. And it's going to be that 200-day moving average if we're able to close above it and then confirm it. So, so I guess all is not just perfectly aligned for the bulls, but it is what it is. No bottoming or topping area in the heat map. Definitely, I would say slightly more bearish than bullish biased at this point. It's really having a heck of a time. So interesting. How about XLF financials as a whole? Yeah, this is totally different than JP Morgan. New recent high on Tuesday. A little bit of a warning area in the heat map. Every indicator ticking up. Very nice. Matter of fact, you can see that we have a level here in the 15 to 15.2 area. Should provide a little bit of resistance. Beyond that, we have an area at the 15.3, so might as well call it 15.0 all the way to 15.3 if it's able to take all of that out. It's not going to have any issues for a little while. And certainly, we do have ascending lows, and we have a new pivot high. At what point it'll stop, we don't know. As long as it's not able to take out the $14 pivot low, the bulls should not have too much to worry about. And looking at the internal structure for volume, we have 5 greens. And 2 of them are really fresh. Don't have much in the way of warnings for a crossover to the red. So yeah, volume-wise, this is not bad at all. And you definitely have to have the banks on board for a real rally. Not bad looking. Not bad looking. And anything else? Look through the list, look through the list. Yeah, I think that's going to just about do it tonight. It certainly looks like melt-up is more than possible, perhaps even probable, but we do have some slight warnings that a small pullback of some degree could easily show up at any time. But in the long run, intermediate run, as long as the pivot lows are not taken out, the bulls are in control. So it'll be very interesting to see how far it can go before it does its pullback of whatever sort it's going to do. And wow, the poor bears, even with a small pullback, looks like they will get beat up after being tricked. So and there it is. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. I hope you have a wonderful 4th of July, and I hope that everybody nationwide thinks about what the 4th actually means. It's not just a day off, it's not just fireworks, and there it is.